Welcome everybody. Welcome to analyze your US shares with VectorVest. So this is done from the Australia office, and I've specially spelled analyze with the US spelling, just because we're in US mode at the moment. Now here's the good news. If you're interested in the US market, what I'm going to show you today, you do not need to know anything about the US market or any US stocks. I'm going to show you exactly how to find some of the best fundamental and technical stocks in the US. The US has some of the world's best shares. All right, it's the biggest market out there. I can pretty much find just about any sector or industry that you can think of. So with that said, this is a very exciting webcast. I see a lot of you in attendance today. With that said, so let's just move myself out the way for a second here, please. I cannot take into account your personal financial circumstances. Please do speak to your financial professional should you require financial advice. All right, so today's agenda, just very briefly, we'll wrap it up within 50 minutes. Define some of the key definitions. I'll define them as we build our watch list. So I'm going to build a watch list today with some of the best US stocks. We're going to whittle it down to some of the best. So we'll start with the good and the bad, and then we'll whittle it down to the good. We'll then analyze those, and we'll clean up that watch list. Okay, the other thing there is to interact during the webinar. All right, so if you're not open up there already, just click that button. It'll open up there for you, and then you can put your question to me. This is very important because this is where I'm going to ask you to let me know of some of your US companies you're thinking of. Don't worry, you don't need to know the ticker code. Just need to know the name of the company or thereabouts, and I'll look it up for you. All right, so just note over here, turn off all your distractions over here and stay focused. All right. So there I am, Russell Mark, I'm Director of Education for VectorVest Asia Pacific. With that said, let's jump out of here. And what I'll do now is I'll fire up VectorVest. So this is VectorVest for the US market. All right, so VectorVest United States. Now, if you're interested in doing this exercise, you take out a trial to VectorVest. In Australia, we give you both the Australia market, the US market, Europe, UK, Canada. You get all those markets for $9.95 USD, so I call it 12 or 13 Australian dollars, and you can trial out VectorVest for 30 days. I would highly recommend you carry out the exercise I'm going to show you now. Okay, so just a bit of background here, just make myself a bit bigger. So this background behind me, I've been a VectorVest now for over 10 years. And prior to VectorVest, I used to struggle in the market. All right, I think a lot of investors struggle in the market before they find the right tools. This technique, I wish someone had shown me this technique 10, 15 years earlier, because this technique has changed my returns, changed my life. I'm not just saying that, that's the honest truth. So here we go. Let's do this. I'm going to show you how I do it and just how quick and easy and fun it is to do. So in VectorVest, we've got this tool here called Viewers. All right, so we've got Viewers, and then over here, I'm going to go down to one here called Watchlist Viewer. Watchlist Viewer allows me to create a watch list of all the different things that I'm interested in. So you can see things I've been looking at in recent times, some blockchain technology stocks, for example. I was very interested to see how that's been progressing. But for today, this is what I want to concentrate on, Stock Health Clinic. So I'm just going to create a group. So I just create a new group, give it its name. All right, so in this particular case, it was called Stock Health Clinic. So I just simply type that in, Stock Health Clinic, and then you just click add. I've done it already, so it creates the group. And once you then selected the given group, so there I've selected it, then all I'm going to do here is just come in here and say new watch list. And again, I just give it a name that I'm happy with, and then click add. In this particular case, I've called it Stock Health Clinic. All right, and I've put one in there. Everybody knows Apple. All right, so a very popular one there. I'll just make this all nice and neat. Very popular one there in the US and around the world. All right, so there's the first one that I've put in. Now, before I get going, I just want to point out a couple of things that we're going to be looking for, and then as we start populating our watch list, we'll start drilling into these. So what we do at VectorVest every day is we'll look at the price, we'll look at the value. All right, so ideally we like to buy undervalued stocks, 137 versus 111. It's neither here nor there. It's not significantly over or undervalued. Then we look at fundamentals. These two indicators here are VRS. We'll cover them shortly. We look at our technical indicators, that being RT, and we put it all together into a master indicator. What I'm going to do, and this is the way I've done this a few times now, and I think the smartest way and the easiest way to demonstrate how powerful this exercise is and how easy it is to do, I'll grab your shares from you once we've populated the watch list, and then I'm going to start to show you certain things about the stocks, and then we're going to start to whittle it down and make it really jump out at us. How about that? Okay. So it's a pretty exciting exercise because now you can give me whatever stocks you want for the US. All right. So without further ado, drop them in the chat box there. If you don't know the name, don't worry. I will go ahead and add them. All right. So I am seeing a few coming in at the moment. So I'm seeing Microsoft. So if I don't know the name of a company, I just simply type in the first couple of letters. Oh, okay. It's MSFT, and then I'll just put it in MSFT, comma. All right, yep, see Amazon, so that's the ticker for Amazon. CDNS was one that was given to me. All right, I haven't heard of that one there. Cadence Design, it's be interesting to see that one here. All right, BAC, PYP, PayPal, yeah, we all know PayPal. Yes, Netflix, that's a good one there. Let's see, Nadi notes CRWD, CrowdStrike. We've all heard of this one. Barbara notes Cisco. Is it just C? It's a no, it's CSCO. See, I can't remember all these codes. There's over 8,000 of them in the US. VectorVest just makes it easy because if I get stuck, I just type in the first couple of letters of the company name, and it'll point it out for me. All right. So 19 asks for Tesla. So if I don't know the ticker code for Tesla, I just type in the first couple of letters. Well, that's the only one that has TES, and L in its name. There it is. Oh, yeah, that's one. TSLA. Lots of hedge funds tried to short Tesla a while back and came a cropper. Let's see. PTON from Nardine as well. Thanks for that. ITW. Notes Alec and ACN. Did I get that right? ACN. All right. Thanks for that, Alec. Square. Yeah, very interesting. I think they're heavily into the whole blockchain investment type stuff, so I've been following them with interest. We've got PayPal already. Let's see, AMD coming in. That's another one coming. Okay. PEP. Who's that? PepsiCo. Yeah, PepsiCo. Remember back in the day, PepsiCo was quite big. It seems to be Coca-Cola. Seems to be the bigger one these days, at least in Australia. Citigroup. C. Yeah, interesting. Watching that company during the global financial crisis. All right, MA, yeah, MasterCard, Nike, NKE, yeah, interesting one. TM, Toyota, yep. Starbucks, SBUX, a few of these I know the codes. BA, yeah, Boeing had a tough time in recent times. PFE. Pfizer, oh yeah, that's an interesting one with the current COVID, isn't it? BRKB, who could avoid that one? Berkshire, Berkshire Hathaway, we all know that one, right? PG, or at least heard of it. Procter & Gamble, have we got it all? All right, let's see. One's coming in. All right, a few more coming in from Nadia. Thanks for that. ULTA, some good ones there from Nadia. Yeah, good one to look at. These ones here. GRVY, is it? Or yep. And ENPH. Teledoc. Let's see what's the code for Teledoc. So I'm just going to type in the first couple of letters there, Tele, and then I need to find Doc. Can I find it? Tele. Sorry if I can't find that one. No, it might just be that I'm not typing it in correctly. I'm trying to look now for anything with the word doc in it. Teledoc. There, TDOC. I think that's one you're after. All right, so TDOC. What I'll do is I'll push enter for now, just so I don't lose all this valuable information that you've given me here to plug in. All right, a few more coming in. Mark notes TG. There's a good reason I think I know that one. It's a good one to short in recent times. XRX. There's some bad ones coming in here. And let me throw in one or two of my bad ones just to demonstrate some points here. GHL. All right. And I'll enter those in. And RCX. Another one that's been under a bit of pressure. Have I got that one already? Yep, RCX. Let's see, Barbara notes Goldman Sachs. Let's see, Goldman, I should know the code for that. GS, just simply GS. All right, so there it is. Thanks, Barbara. And, oh yeah, perfect. Sorry, I didn't read your next comment. Yep, you'd noted GS, and there we are. Okay. I see a ton of codes coming in as well. Let's see what we're up to. We're up to about 30. Look, just for time permitting, don't worry if I didn't get your code in. All right, I'll try to do a final sweep at the end. I just want you to pay attention to the methodology now, right? So don't worry if you missed it. You can take it a trial, and you can do this exercise 100 times over during the next 30 days, should you choose. Now, let's pretend we're fund managers, because at the end of the day, if you're managing your own money, you're effectively your own fund manager. All right, so you either give your money to someone else, and you entrust your money to someone else, or you do it yourself. And here in Australia, of course, a lot of people do it through their self-managed super funds. So if you're dialing in internationally or listening to this from overseas on a recording, it's kind of like what the 401k account is in America. You get some sort of control over the 401 to some extent. Of course, there's very strict rules. You can't just take your money out prior to retirement. So here in Australia, we have a similar thing through our self-managed super funds. And yes, your self-managed super fund can invest in US stocks. I just want to quell that that confusion. I think a few investors out there say, oh, but you know, I can't invest into US stocks. Yes, you can. Speak to your financial professionals on your structure for your self-managed super fund. You can. I do it. I do invest into the US market, and it's perfectly legit. But again, this is not to be seen as financial advice. Do speak to your financial professional, because each circumstance may differ. Okay, so with that said, let's go and now start pulling these stocks to bits to work out what's good and what's not good. We want to be left with something that's really powerful at the end of the day. All right, so with me out the way, I'm going to go just down to the bottom and see the total resource set, so to speak, that you provided today. So I can see overall the price is 137 for this portfolio on average per share, and the value is 111. Neither here nor there, slightly a little bit overvalued, but not bad, not bad. Now, these indicators here, RV and RS, these are your fundamental indicators. Fundamental on a scale of 0 to 2. So you want them to be as high above 1 as possible. RV is looking at long-term upside potential. So our portfolio on average is actually not too bad. It's ranked at 1.16 out of 2. That's pretty good. Anything 1.4 or higher is a very good score. So 1.16 is actually a pretty powerful score. But having said that, if I scan my eye down the list over here, and let's just sort it. So if I click here, and I can go into descending order. So there's our best one in terms of upside potential. But as I come down to the bottom here, look at this one here. TG ticker code, RV, well below 1. All right, let's graph this one just to show you. So saying the fundamentals are not too happy at the moment. We'll come to this shortly. I'll just turn that off for now. If I pull it back a wee bit in time over here, you can see it hasn't been a very happy stock, has it? It's been very, very volatile and literally gone nowhere over the last 5 years. Right, it's kind of back to where it was 5 years ago. So not a particularly pleasant stock to be in. You know, you feel pretty excited here, and then you feel low down here, and then you feel excited back up here, and you feel frustrated back here. All right, don't have to do that yourself. All right, so we'll close out of that one. Let's look at our top RV stock. Now, it's currently got a sell rating. I'll get to that shortly. So it's going to be in a bit of a downtrend, but it's saying that it's a stock with some of the best upside potential per our portfolio as it stands. Well, look at the graph in recent times. All right, so it's taking off. All right, so it's taking off here. Look at its value. There's the valuation. I'll just change that because they're both the same color. So I'll just make it jump out a slightly different color here. Here we go. So that's our valuation. That's the share price. So it's got some upside potential in it yet. All right. I won't get into all these other indicators just yet. We'll just go nice and carefully and slowly to begin with. All right. So we've covered RV. All right. RV versus for now. Now, just want to double check. I think it's actually updated because I thought we had a higher figure. So just on that there, here we are. I think that's actually, here we go. It was just calculating through, so my apologies. Let's go back and re-note this. 282 price, 152 value. All right, so actually, having said all that, just double check, yeah, it has updated. We've got a little bit of an overvalued portfolio. Our RV is not that strong on the portfolio, so upside potential. Then we look at the financial consistency and reliability of companies' financials. So when you're looking at given stocks, you can, if you choose, go in and start looking at the different financial statements. So I could come in here and I could say, okay, well, let's get going. Let's look at Berkshire Hathaway. You'll be there for days trying to sort of decipher all the financial statements, lots and lots of business entities and whatever have you. All right. Well, if you're good at that type of stuff, you might be able to do it quickly. But for myself, I struggle to read through all the different financial statements. I certainly haven't got time to go through all of those financial statements in an evening, let alone print them out. Okay, so we do it for you at VectorVest each and every day. So we've done the work for you. We're looking at the consistency and reliability of those company financials based on past performance and current performance. And we're looking at all that. So if I click on the RS score here, all right, so here we go. Here's RS. All right, CDNS. This has got some of the best financials right now. Let's graph this one. So I'll bring this one up. All right, so it's a little bit of a premium being paid. That's often the case with good quality companies. Investors are prepared to pay a bit of a premium, so just need to be mindful of that. Let's go in and put in the RS. Add parameter, RS. Here we go. Wow, so that RS on a scale of 0 to 2, it's above 1.4. That's an excellent score. Now, here's the key thing I want to show you. Companies with consistent and reliable financials are companies, here we go, that are often, or should typically always, just in most cases, be growing their earnings. I'll make the style jump out a bit more. It's a bit difficult to see. And how can we do this? Let's make this really shine out. There we go. That's a bit nicer to look at. Okay, so look at now look at this. This is net profit margin. So this is what this company is making for every $1 of sales. So for every $1 of sales that this company CDNS makes, it's making 32 cents on the dollar. And if you look at its sales, look at the sales. The sales are growing. So this company is growing its sales and making more and more money on average per every $1 of sales it makes. That's why this company's got a powerful set of financials. If I close out of here and we go down to the bottom of the RS, let's come down to the bottom here. Citigroup, not as strong. Look at that, it's the RS 0.87. Let's graph this one here. All right, look at that. So your net profit margin is dropping and the sales are dropping. So just something to be aware of. Okay, moving along. So we've looked at RV, RS, RT. RT looks at short-term price momentum. So for the portfolio, on a scale of 0 to 2, it's above 1. The momentum is up. Let's confirm that. Right-click. I'm going to look at the total portfolio, assuming we had an equal weighting in every stock. Let's just turn this all off for now. All right, so yeah, you can see that the portfolio, as it's tracking, wow, look at that. It's got really good momentum at the moment. All right, so at the start of the year, where was it for 2021? So it's only just sort of kicked off. So here we are. What's that? It was February. Go back to January, around about here. So at this time period here, it's gone up quite nicely. All right, and the year prior cranked up very nicely too. So you guys give me some really good stocks, but we can improve it further. Okay, so if we look at our technicals, so we looked at it from a portfolio perspective and we look at it from an individual perspective. So if I click on RT and we look at the top one, Tesla, it's rocketing off to the moon, pardon the pun, with SpaceX, but this company's on fire. All right, so the hedge funds that tried to short this a year or two ago, no doubt are suffering if they haven't really closed out their shorts. All right, so that's rocketing up. On the flip side, let's look at the worst RT score. All right, TG. If we graph this one here, all right, that's the one we saw before. Very volatile and with a downtrend. And this one here, all right, this one here, you can see the trend has started to fall away. Okay, so if I add in parameter, capital appreciation RT, short-term price momentum, there it's breaking below 1. At that point there, you want to be careful. So it starts to just sort of bounce in and out and breaking below 1, you want to start being careful. On the flip side, okay, on the flip side, if you find a company where the technicals are motoring up, like with Tesla Motors, again, pardon the pun, but here it breaks above 1, right? So it's breaking above 1 here. It tells you that the momentum is beginning. There's some momentum taking place, and it goes from, what was it, 149, runs all the way to here where it has a breather to 330. All right, so you double your money. You're feeling pretty good at that stage. Technicals break back up again, has another little run from 372, and it didn't break below 1, and it's now at 849. Wow. Okay, so very handy indicator, that relative timing indicator. All right, moving along. VST, we then wrap up all the shares with the best combinations of fundamentals and technicals. So this indicator VST is looking at value, RV, safety, RS, and RT, our technicals timing. So fundamental and technicals combined. It's not just this plus that divided by 3. A little bit more of the weighting goes into the technicals, but fundamentals are very important too. So there's your VST score. So on a scale of 0 to 2, let's see what some of our best VST scores are. Look at that. So Tesla right up there again, ENPH, etc., etc. Let's click on this one here. This is our second best fundamental technical stock. Look at that. Technicals are firing up. Relative safety is holding nice and strong. Net profit margins rocketing up. Sales are holding steady. If I pull it back a wee bit over here, it's actually lifted up and holding steady. There's a lot to like about that company. On the flip side, as we come down to the bottom of the list, all right, let's graph, say, these two here. Oh, Berkshire Hathaway. I wouldn't have thought I brought this one up for this example, but they're not as strong relative to the other ones currently. All right, so Berkshire's still on a good trend, but it's the volatility sort of playing against it at the moment. And this one here, again, you know, not bad. Technically, it's moving up, but you'll see some of those sort of the technicals are just, you see over here, just starting to break down. All right, that's why it's one of the worst ranked ones from a VST perspective currently. All right, moving along. I mean, these are bottom two. They're not too bad, right? Moving along, we then have this indicator here being CI, Comfort Index. These are companies testing new highs and resisting severe or lengthy declines in price. All right, so our smoothest one's Tesla, followed by, in fact, let's just make sure CI was a Tesla. Let's double check. No, CrowdStrike. That's our highest CI. All right, so let's graph this one here. All right, so you can see this one's got one of the smoothest profiles, right? If I go down to the bottom of the list, one of our worst profiles is Citigroup. Let's have a look at its profile here. You can see why. All right, so it's in a sort of a down type trend. All right, a little bit of sort of up and down, but it's the trend is starting to go to the downside. All right, with all that said, what you want to do is you want to make sure you get the best combinations of fundamentals and technicals. So hence, we sort of by default by VST. And we also want to make sure we've got a nice strong CI with a buy rating. All right, to get a buy rating, your VST score must be above 1. Your technical score must be above 1, and the price must be moving up. It must be moving up against the stop line that we calculate every day. So we have a stop line that we calculate every day in VectorVest. Again, just using pure mathematics, and we start to pick up where there's a breakdown in the fundamentals and technicals. So if I add in our stop, let's just double check if I already got it in here. No, I just want to double check. I'll go to another layout here. VectorVest simple. All right, and there's our stop line. All right, so you can see there's a stop that we calculate. So if your share price breaks below there, we're saying be careful. All right, so I've gone through some basics here. If you ever get stuck, right-click in any stock, and you can view the full stock analysis report. Every single definition that I've covered today is in the free stock analysis report. All right, so everything we spoke about, you know, RV, RS, RT, all this key stuff is in that. All right, so any stock, you right-click, view full stock analysis report. I'd highly recommend you print one of these out if you take out a trial. It doesn't matter for what stock, because it'll have all the key definitions, and then you can refer to them. Okay, so don't worry about jotting down all those definitions. I should have mentioned this up front, because they're all there for you, and you can then print one out. Now, let's get to work and let's pick out some of the best stocks in America right now. So what I'm going to do is I'm going to show you a few techniques. All right, I'm going to show you a few techniques to find some of the best stocks in a few seconds. So let's say you give me this watch list, right? So there we go. And you give me 34 odd stocks. I'm showing the top 30, so let's show all. Okay, so here are all the stocks. And I go and I right click down the bottom and I look at the overall selection of what you've given me. So I look at this and go, wow, this is amazing. Great portfolio, but we can make this jump out a little bit more. The thing that's going to drive that portfolio is earnings. Now, as you can see, it's, no one's complaining. Your portfolio has gone from 87 to about 282 in value per share. So it's gone up, 3-4 times. Have a look at this over here. This is our earnings profile. Rising earnings will drive a portfolio up. So this is the earnings for the portfolio. Earnings going up, portfolio going up. But look what's happening in recent times here. We're just starting to see a little bit of sort of volatility here. It's picking up again, but I want to get that earnings profile a little bit smoother. Because when the market does start getting more choppy and we start going into more difficult market conditions, if you're holding on to a portfolio with sort of lackluster type earnings, you've got to be very careful, right? Because falling earnings in a falling market is going to drag those shares down very quickly. All right, so we need to boost up the earnings a bit here. There's a few that are dragging our portfolio down. So here we go. The way I do it is as follows. I'm going to introduce you to one additional indicator here. GRT, earnings growth rate. So this is the earnings growth rate in percent terms that's likely to take place. So this is our earnings growth rate with the outlook built in there. And I look over here and I go, wow, CrowdStrike 46, 35. This is what the company's looking to grow its earnings by. Phenomenal growth. But as I come down here, I go, 0 for Cisco, 0 for Leg Mason, so you pronounce it, MasterCard, -1, -5, so you start getting into a few negatives here. You start saying, look at Boeing, -10%. Let's graph Boeing. We know Boeing had been under a fair bit of pressure for quite some time. Oh, look at this. Do you like those earnings? I don't. If I was to go and buy into Boeing, I'd say to myself, be careful, because if I'm buying in a company with falling earnings, it's going to impact the price. All right, with the issues that Boeing's had, it's no surprise that the earnings are going down. It'll turn around at some point, potentially. I don't know. I'd rather not take the risk. Okay, so I can always buy back in a later date. So that's one I'd want to be careful of. On the flip side, if I come up to the top, so I think we looked at CrowdStrike. Let's look at a few here. Let's see, why is Tesla booming up so much? Let's look at Tesla's earnings. All right, so you can see in recent times Tesla's had a phenomenal turnaround in its earnings. A little bit of sideways action at the moment, but I'm not too concerned. All right, the overall trend is still up for now. All right, there was another one in here, like for example Amazon, the almighty Amazon company here. It's a money making machine, as we know. And look at those earnings, just breather, whoosh, up it goes again. Might have another breather, then whoop, up it goes again. Look at this. Look at this. If I pull it back over the years here it is over. This will be interesting. Let's just recalibrate that so it's nice and neat. Here we go. Whoa, look at those earnings. So from around about 216, this company really started to take off from an earnings perspective. Around about here, this is where it almost went exponential type thing. So where was the price? At 1,000, what's that? 665. It's now doubled at 3,331. And I don't think their price is going to come down anytime soon if the earnings continue to power on. All right. So this is what I want to make sure that you're doing when you pick your US companies. This is the secret. Make sure you're getting those companies that are growing their earnings. Pull this one back. This one here is very interesting. Look at Microsoft. So Microsoft had kind of struggled a bit from about 212 to about 216, and then something took place. So for our VectorVest subscribers, you've heard me mention this before with Microsoft. What took place? It was around about that time Office 365 came out. Now, if you're using Office in the past, you remember you just go to say in those days, Dick Smith Electronics, and you'd buy your copy of Microsoft 2013 edition or whatever it would be. You install it onto your computer, and you'd either have a student edition or an enterprise edition or a business edition, or whichever license you fell under, and that was it. So you paid for it once, it was on your computer, and you didn't have to worry about it for a couple of years. Now what happens? You have to renew your license, and every year, if you notice, the license fees just keep going up. So Microsoft have found a clever way to increase their earnings, and you're seeing that there. Okay, so with that said, this is an absolute textbook earner, but let's close out of here, and you can see that the earnings there are looking to grow at about 16%. Now, let's go and remove any where the earnings are 0 or negative. All right, so I'm going to take away motion. What I'll do here is I'll make a copy. So if we want to go back to what we originally had, we'll have a copy. So I'll keep a copy there, and I'll go to this one here. So we'll modify this one, and then we've made a copy of it. All right, so let's do it. So what you do is you then select GRT. So this is what you do. You put your stocks in, come in here, remove anything where the earnings growth rate is 0 or below. That's what I like to do. Right, so straight away, boom, out it goes. So we had 34, we're down to 18. All right, so we come back here, we go, okay, good. Next thing I want to pick on RS, our safety, financial consistency and reliability score. Why do I want to hang on to any companies where the RS is below 1? All right, this is borderline here. This is not too bad. I'm being very strict. But look at that. Look where the RS was below 1. Look at the earnings. Although the earnings are having a good comeback, it's about to turn the corner. I'm going to say I'm a bit more conservative. I'll wait until that corner is turned, and that'll also reflect through in the RS score. All right, so I'll take that one out. It was the only one I'll take out. Take that one out. All right, so we'll remove that one. All right, let's go back here. Let's keep going. So we've got our RS. All right, now our relative value score. Looking at upside potential. Okay, everyone's above 1 except these two here. Let's graph them. So have a look. Upside potential struggling a bit at the moment. Well, I like the fact the earnings have just turned the corner. So it's up to you as to whether you want to keep that. I do like that. But if you're more conservative, I'd like a much better track record on the earnings. Here it was negative for quite a while. Obviously, investors saw the fact that this company was about to turn itself around. But look at this. This is another telltale concern. No data before the 28th of October 2019. If you're conservative, you want at least 5 years of track record. This company does not meet the 5-year track record rule. This one here is, in fact, let's see, let's just make sure it's going to be at least 5 years. Let's make sure, yep, just on 5. The earnings are nice. I actually quite like the fact that the earnings are coming up. It's been under a little bit of pressure. All right, but you know what? I can afford to be really fussy because I've got plenty of stocks in my fingertips. So I'll take these two out for now. All right, so there we go. All right. Next thing I want to do, I don't want any share that is sell rated. A sell rated share is where the company, I'll just go back to where the sell rating is. It's where effectively where the share has fallen through the stop that we calculate every day. So if I bring in the stop, you can see over here, it's just broken through that stop line. Look at this, the earnings are starting to go south as well. Okay, so there's a warning, and we're backing it up with the earnings. So take that one out. Okay, so we're now down to 14. Coming across over here again. All right, what I'm going to do now is I'm going to do one final sweep, and I'm going to be looking at the earnings profiles. So let's do this. We'll pull it back a couple of years, and anything where the earnings are a little bit ratty, let's, as an investment committee, so to speak, let's remove them. All right, so now I'm doing my due diligence. Are the earnings good here? Yes, and the share price has been pretty good. Okay, next. It needs to jump out at you where you go, oh, those are not good earnings, right? AMD, wow, what a money-making machine. Okay, let's keep it going. Yeah, there's a little bit of a sort of volatility here, but I'm prepared to let it slide on this occasion because the trend is still very, very good. All right, keep going. Wow, another absolute machine. Apple, look at those earnings. That's why they are who they are. The earnings just keep growing. Okay, Amazon, we've looked at that. Brilliant earnings. Whoa, look at the earnings in this. CDNS, who gave me this one here? Take a bow. Unbelievable earnings. This is almost like someone had taken a rule and drawn a perfect 45-degree angle and then drawn the line. So whoever gave me that, you are an expert at picking companies with good earnings. All right, don't tell me you gave me this. CrowdStrike. I think I'm going to give this one the strike. I don't like this. All right, it's too risky. I don't have 5 years of data. This is a bit of a gamble in that respect to me. All right, so CRWD. Let's just take that out for now. So I'll take that one out. Out it goes. Okay, so we then, I think we looked at that one there, but let's keep going. Just make sure I haven't missed any. All right, so we'll pull that back just a wee bit here. Okay. ENPH. I like the earnings in recent times from about here. So March of 2018. All right, so it looks pretty good. A little bit volatile prior to that, but if you're happy that the earnings have been good from around about here, then it's still a go. All right, we'll keep going. The share price here on Goldman Sachs is pretty ugly. It's not a. This would not make me feel comfortable sleeping at night. It's sort of up and down, and the earnings are sort of a little bit sort of ragged. So sorry, Goldman Sachs, you might have brilliant technical analysts that work for you and the likes, but humble me in terms of critiquing how your graph looks. It doesn't stack up relative to the other options I've got at my fingertips. All right, so again, remove the emotion. If this gets in the way, you go, oh, I can't sell Goldman Sachs for whatever reason, then I can show you in the Q&A session at the end. You can remove the names. Okay, so you don't have to see which name it is. We've seen Microsoft, brilliant set of earnings as we've spoken about before. So we'll keep going. Netflix, in fact, look at that Netflix. You know, the COVID lockdown. Wow, those earnings just rocketed off. Everyone was watching Netflix. Okay, Nike, yeah, it's okay. It's sort of, it can be a little bit temperamental at times, the earnings, but still pretty good. PayPal, what do we got here? We've got no earnings prior to that, so if I zoom it in just a tad, we've got about 5 years, so that's okay. Wow, look at the earnings in PayPal. Okay, keep it going. And Tesla, yeah, it's not. Look, this is your weakest earnings of all of them here. All right, it was sort of ratty up until about here, and then it starts to turn around. You know what? I hate to say this, but it's me. Let's just pretend I was the chairman and I had the final say. I'm a bit more conservative. So guess what? Unfortunately, for you who love Tesla, I'm going to take it out just because, well, I'm the conservative investor in the hedge fund, and let's say I had the final say. All right, you've got the final say. Don't forget. Okay, so that's just me. If you disagree, great. Build the one that works for you. Now, let's have a look. Price 480, value of 294, so a little bit of a premium. I'm not too concerned. RVRS, very good fundamentals, technical, strong, and a good combination of fundamentals and technicals with a nice smooth left to right pattern on average. Here we go. Let's right click. Let's view the watch list average graph. All right, so here we go. Let's pull it back a tad. Wow, there we are. Do you like your earnings now? Let's do this. Keep that here. Let's go back to the copy. So remember we made a copy of the original. So this is the original. All right. And let's pull that back 5 years. All right. So let's compare apple with apples. Apples with apples. All right. So here we go. Here's your 5 year that you gave me. Very, very good, I must admit. And this is what we've done with it. So there's what we did with the revision. And there's what you gave me. All right. There's what you gave me. And there's what we did. There it is. It stacks up. That's just with what you gave me, right? That's what you gave me. So in total, we whittled it down to 12, and this has some rock solid earnings behind it. All right, brilliant. Let me conclude with a final one for you. I'm going to create a new watch list. All right, okay, and let's call this excellence. How about that? All right, excellence. Can we achieve excellence? Well, let's get VectorVest to do the work for us. What I'm going to do here is I'm going to go to VectorVest. It's a tool here called Unisearch. All right, so what Unisearch does for me here is it will rank, screen, and sort stocks according to certain criteria. And I'll go to my prudent searches, and I'll find some of the best stocks money can buy that are the big end of town. Let's just pretend we're conservative, very conservative. All right, so it's doing some wonderful sorting here, you know, best market growth rates, market caps, best fundamentals, you name it, all the things. And look, there's a few here that you've given me today. Now, let's do this. Let's grab in the top 25. All right, and I'll grab them here. So I'll select them, and I'm going to just add them into my watch list. Don't worry, you'll get to learn how to do this if you take out a trial. It's pretty straightforward once you've done it a few times. And there we are. We'll put it into this excellence watch list. All right, now let's go back to our watch lists. All right, so I go back to my viewers here. We were on Unisearch, and we're going back to viewers and excellence for the US market. All right, so here are those 25. Let's go back and have a look at the average, and then we'll clean it up. We'll take it back and clean up. So this is our starting point. See how much quicker it was to get 25 stocks, and straight away, look at that. Whoa, you know, phenomenal earnings profiles there. It's mind-bogglingly good. And when you look at, and how hard was that to put together? Did I spend hours generating that? And look at that. That's 11 years worth of earnings profile. Let's go back 17 years, for example. Look at that for 17 years. It's hard to appreciate until you sort of roll it bit by bit. So let me do this. I'm going to sort of overload it a bit. All right, but watch this. Watch the earnings. So we come forward, a couple of years, and just keep rolling it forward. Can you see how those earnings continue to grow? As those earnings continue to grow, that portfolio continues to grow, and that's one of the key secrets behind investing. Just buy companies making more and more money. Told you it wasn't hard. All right, right. So, and that's what you need to do. But unfortunately, most investors don't have these types of tools. They're not taught these types of things, right? Okay. So, with that said, let's clean it up. So I do the exact same exercise again. This time around, instead of having to think up a whole lot of stocks, I've just let VectorVest do most of the grunt work for me with a few clicks in the mouse. Growth rate, it's sorted by GRT. Here we go. All right, here we are. Well, they're all so good already. None of them are negative. Well, you know what? I'm going to be fussy. I'll have a cutoff point with 20 or below. Sorry about that. You need a 20% or better. All right, like I said, it's got to be the excellence group. So excellence will be defined by 20 or better. All right, we'll keep going. VST. So our fundamental and technicals combined. Let's do this. Let's see. Why not? Just for the sake of it, I'll just drop the bottom three. Amazon. I got rid of Amazon. How can you get rid of it? But I'm just being very fussy here. All right. Any RS laggards? Anything where there's an RS? Yep, you're a laggard, unfortunately, at 1.02. Look at the benchmark is 130 or better. All right, so I'm being very, very cruel here. And again, if this upsets you in terms of removing companies, you might not want to just hide the columns so you can't see what you're doing. Okay, so you can then just concentrate on what you need to do. All right, RV, well, no, they're all very, very good RVs. All right, so the last thing we'll do, we will run a quick earnings check. So let's do it. Let's say 5 years minimum. If you don't have 5 years, you're out. That'll be the rule. All right. Look at this. Quite a bit of volatility in there, but nonetheless, the earnings are going gangbusters. All right, this one here, a little bit of a tail that you just need to be aware of that. All right, keep going. All right, so I'm seeing over here. This was negative for a while, so if you want to be ultra fussy, you can remove that out. This is probably your weaker link one here, but look at this in recent times. You can't really sort of fault it. Whoa, what's happening here? Boom, off it goes to the moon. The earnings are going gangbusters at the moment on Shopify. Everyone's in lockdown. They're buying online. All right. So again, here's your weakest link, Tesla, the earnings here. All right. So Tesla, we'll take that one out. It's 1 or 2. Arguably, I could have removed, but there we go. 8. There's my final 8. Let's right click. Let's view the watch list average. And here we go. Let's go back a couple of years. Do you like the look of that? It's not bad. A little bit of a breathe on the earnings. I'm not too concerned. There you are. That was just another way of getting to what we got to before. I really like the look of that. That's a powerful set of earnings. It's driving that company. Let's add in our last checks and balances here. I'll just recalibrate that. There we are. Let's add in our sales. So I'll do it here. Sales. So what is this company doing in millions of sales? So this number's in millions. And if I make that an area graph to jump out a bit more and change the style, let's just make it a little bit more prominent. There we go. Very nice, growing its sales. Okay, what about net profit margin? So VectorVest fields and my net profit margin, there it is. What's this company making in dollars and cents for every $1 of sales? Well, it's making 21 cents at the moment. Okay, so 21 cents or 21% margin. Who's going to complain with that when you've got sales that are doing this? So there's your margin, there's your sales. Sales are going up, margins going up. It's driving those earnings. Earnings going up, and guess what? Surprise, share price goes up. There it is. Now, here's the beauty of VectorVest. If you like that exercise for the US, guess what? You can do it for the other markets. All right, so I'll just show you here. If I click on my icon here to load up VectorVest, let's see, VectorVest. This should fire it up, and I'll then bring it over. Okay, so when you get a trial to VectorVest, for example, if you take a trial, I'd highly recommend you do this exercise. When you log into VectorVest for the first time, you'll see on here, it says which country do you want to have a look at. There's Australia, right? UK, Europe, Canada, America. We did the exercise for America. We did the exercise for Australia a couple of weeks back. All right, so if you hop into YouTube, type in VectorVest Australia, go to the VectorVest Australia channel, you'll see the exact same exercise done, but for the Australian stocks. Okay, in this example today, I did it for the US. You can do the same for Canada, Europe, UK. All right, so if one country's not working for you, you say, well, I'm not getting this sort of stock, so I sort of want for America. Go and do the exercise in America or Canada or Europe or UK. It's so easy now to invest into international markets. Most reputable brokers, it's not an issue. In fact, it's cheaper half the time to buy in international markets than what it is to buy locally in the Australia market, for example. I get lower brokerage fees for trading America than I do for Australia from brokers in Australia. Okay, so there we are. Do that exercise. I hope you got a lot out of it. How easy and fun was that to do? A few of you asking here, can I just jot down those codes, please? Not to be seen as financial advice. Do speak to your financial professional, but that's how I do it using VectorVest, and it's fun. It's fun to do, easy to do, and guess what? I just keep reviewing my portfolio. So people say, well, what do you do to review it? I just keep reviewing the portfolio each day. It takes me 2 or 3 minutes, and I literally just run through the graphs and just double check to make sure that the earnings are not falling. All right. So has anyone got any questions before we wrap it up? I hope you found just how quick and easy it is to do. Before I do so, get into the questions, I'll just show you our website here, www.vectorvest.com.au. All right, so this is the Australia website, and if you want to take out a trial, there we are, risk-free trial. Click on there, and then away you go. For $10 US, you can trial our VectorVest for 30 days. Do that exercise. Do it in Australia. Do it for the US market. Do it for Europe. Do it for Canada. You will be blown away by the type of stocks that you're able to do so quickly. All right, so there it all is. Just to set your mind at ease, for those of you that do take a trial, we have a great team in Melbourne. They'll give you a call and they'll say, right, would you like some free training? Don't worry if you get a call from one of our team in Melbourne. It's not a scam call. They'll say, look, we see you've taken our trial in recent times. Would you like some free training? And they spend up to about 30, 40 minutes with you on the phone to help you get the most out of VectorVest. All right. We've got a toll-free number, 1-800-303-782. It's on our website. So I did rattle that off pretty quickly, but it's 1-800-303-782, and there you can then, there it is, you can give our team a call, and we're open 17 hours a day, 6 days a week. So we're there to take your calls. We've also got a live chat, so you don't have to call us up if you don't prefer. If you prefer to live chat, then there you go, just click there, and you'll then be connected in, and you can then chat to our team. Okay. So there's that as well. So there's plenty of resources. A lot of people often say to me, Russell, you know, you make it all look so easy, but, you know, just in case I didn't quite sort of get all that, you know, how can I make sure that I can get up to speed to finding some good stocks? This is why we have this training tab in VectorVest. Really great training tab there. So when you're starting off, I'd say just go through those first 5 lessons. No, they're not daunting. They're about 15 to 20 minutes each. Just go through them. And I'll show you, see here, weed your portfolio. That's what we did today. We created a portfolio and then we weeded it out. All right, I was pretty strict with the way I weeded it. This video here is probably not quite as strict as what I was, but up to you. You know, it's your money. You can be strict as you want with what you want for your portfolio. And then also what we have too is we've got a navigation training series. All right, this one here is amazingly detailed. You don't have to go through all the videos. So there's 16 in total. Choose the ones that you want some further knowledge on. You know, I need a bit more on graphs, and I need a bit more on portfolios or whatever it might be. Choose the ones that you want, and they're all in there. All right, so that's all part of that training tab. All right, so that training tab there in VectorVest. All right, so there it is. So let's, if you're asking, just go back to that portfolio again. So there we are. That's the excellence one that I used with VectorVest with just a few clicks of the button. Remember what I did? I went to Unisearch, and I just went simply to search as prudent, best of the biggies, some of the biggest blue chip, performers in America, and household names. Just about everything on here you've probably no doubt heard of, right? And I just simply said, well, 25 would be enough for me. I could have drilled in a bit deeper. 25 was enough. I then grabbed those stocks, I put it into a watch list, and I then went to the watch list, and I just was very fussy. I removed anything where the RS didn't stack up, or the GRT score didn't stack up, or the earnings didn't stack up, and I whittled it down to 8, and the net effect was that, which was a pretty compelling performance in recent years. All right, there it is. Best of the biggies search there, does it again. Very powerful search there, and that's how we do it. So if I was to look to go and load up any further stocks in the US, for example, on my portfolio, these would be the ones that I'd now consider based on the recent exercise I've just done. All right, so I'll wrap it up. So yeah, if you want to put any questions, let me know. Did you enjoy it? Did you find it interesting? Hopefully you share my passion. It's easy to find these. It doesn't have to be copious amounts of research and pulling financial statements to pieces for the next 35 years type thing, or next 50 days or whatever it might be. There are easier and smarter ways of doing these things, and that's why VectorVest has been in business for 30 odd years now. There's a reason why we've been around that long. There's a reason why we're such a well-known and trusted name out there in the investment world for people that want the tools, they want to do it themselves. All right, so yeah, just a question coming in. Let's just see that. Yep, in regards to that trial again. Yep, so just don't forget, it's www.vectorvest.com.au. All right, so let's just close out of here. It's not the one I want to go to. So vectorvest.com.au. Here we go. And there it is, risk-free trial. Okay, if you prefer, call our team, toll-free, Australia toll-free, 1-800-303-782. If you're watching this and you're an international attendee, then here we go. So if you go to vectorvest.com.au, for example, or vectorvest.com, you can click on Contact Us, and here's some international phone numbers, right? So US and Canada, Belgium, Germany, Netherlands, United Kingdom. All right, so just work out which is the cheapest way to call up VectorVest if you want to speak to us via your international carrier. Otherwise, the other option, just live chat to our team. That's sometimes a quicker way too. All right, so hope you got a lot out of it. Have a look on Facebook, not Facebook, YouTube. Let me just see if I can bring it up for us. All right, I'll just go onto my other screen here, and I'll show you the VectorVest Australia YouTube channel. Very handy. So VectorVest Australia, I'll just typing here on the other screen, and I'll bring it across. Aha, this is what I want to do. Okay, so YouTube, if you go to VectorVest Australia, just type in VectorVest Australia on YouTube, you can't miss us. And then here I am, and then if you click on videos, you'll see here, so we've got a new channel. We haven't been going for too long. I should have been probably uploading a lot more videos in the past. But we built our library up now to just on 30, I think it is. So here we go. So here we are. This is where we did the health clinic for Australia. So we did that a month ago. We did it twice. All right. I did a talk the other day on retirement stocks in seconds for the Australia market, finding some of the best dividend payers out there. So you might be interested in watching that one there. And I did a recent one just the other day on, concerns about, is the market about to crash? If you're concerned about that, have a look at that video there. Very telling and interesting. All right, so I'll wrap it up at this point here. Thank you so much for your time and attention today. I hope it was worth your while. No doubt you would have got a lot out of it. I'm just trying to get my camera. There I am. Okay. No doubt you would have got a lot out of it. Thanks again. I'll just, what I'll do at the end, I'll pause it. So if you wanted to jot those down, there we go. Okay, so thanks again. Have a great morning, everybody. Bye for now.